In this expose, you'll learn how to repetitively borrow, work with, and create profit while systematically repaying 0% interest capital over 6 to 24 months with no out-of-pocket fees up front.
We're going to show you how the power of multiplicity will skyrocket your credit score and expand your available credit, and why a portfolio of lenders is always better than one.
You will learn how to use a portion of the money you borrow to carry the loans and maximize your credit profile while you use the rest of the money to make more money.
You need to stop being told no. There are too many lenders offering $50,000 to $250,000 of business capital at 0% for 6 to 24 months. You'll see for yourself how you can become part of the 20% who always get the best terms.
So watch our expose to increase your credit score, increase your available credit, and improve your future by increasing your access to 0% capital.
Organized banking records show small business application approval rates have increased 25% over the last 5 years. That sounds impressive.
Sure it does. Right up until you look at the actual numbers. They used to approve 15%, and now they approve over 20%.
Wow, big difference. But seriously, only 15%. That must be the excuse that Congress needed to use the small business problem as a political opportunity to pay back organized banking.
Under the guise of the SBA and the USDA lending guarantee programs for small business, the politicians created guaranteed profit for organized banking. 50 to 80% of the amount loaned to any qualifying small business is practically risk-free to the bank.
So organized banking gets the guarantee on the loans. Has small business lending changed?
Oh, Lord, no. Unfortunately, these loans still have to be approved by the same wise guys, and that's less than 50% of applicants. Almost 100% of startup businesses are declined. The reality here is these loans are going to the same businesses that would have gotten the loans before the program existed.
Unbelievable. So it's not trickling down to help small business in the least. It's helping organized banking make more money. Yeah, that sounds exactly like what we expect out of Washington.
That's why we vote. Alternate lenders outside of organized banking are available. They charge fees the wise guys drool over. At 36% and rising to 84%, these options only make sense if you're avoiding a catastrophe or you're making enough money.
Wow, that really is expensive. You know, there is a better option that provides more business credit immediately and shows you how to manage your lenders instead of them managing you.
That sounds like an awesome improvement. We'll call this option a PubLock, a portfolio of uncollateralized business lines of credit. And we know that's a mouthful. What's important is it provides 0% funding now and additional 0% funding later.
A portfolio of uncollateralized business. What? I mean, what's a PubLock, Jeff? It almost sounds like a college drinking game. Seriously, how is this PubLock you talk about going to provide us with funding now and more credit later?
I wish I went to your college. By using a tool organized banking has tried to suppress forever, competitive resourcing. That sounds silly? When was the last time you applied for more than one credit card at a time? Didn't you get declined along with a letter about too many inquiries and too much credit recently issued?
A PubLock exploits a systemic anomaly, overcoming organized banking's collusive suppression of your access to creditors and credit by making it possible for you to open multiple credit lines at the same time. We call this the power of multiplicity.
So if you have a credit card account and you always pay it on time, and you pay it off from time to time, your credit score will rise a little bit, right?
Oh yeah.
So how much higher and quicker would your score rise if you had, let's say, 12 accounts and did exactly the same thing?
A PubLock is created by a specialized lending broker who knows how to enhance your credit score and your profile. Your enhanced credit profile is then compared to the target profile of multiple lenders where they have working relationships.
By matching your profile to what motivates the most competitive lender, you receive both higher credit maximums and longer 0% interest periods. These brokerage relationships are the key to a portfolio of multiple credit lines issued within days of each other.
That's right, Jeff. You can obtain combined credit lines of $50,000 to $250,000 per business owner. from 7, 12, 15, or more creditors with 0% interest for 6 to 24 months and a current blended average of 9.9 on any balances you carry beyond the 0% introductory interest periods.
Now, we don't recommend doing that. We recommend using 0% capital for as long as there are literally thousands of lenders offering it.
Yeah. Let's look at your PubLock as a 4-stage growth rocket that provides initial working capital and pays for itself.
Let's remember our primary objectives. First are to provide you your initial funding, and second, to increase your credit score to excellent. Because by doing so, your future available funding multiplies and the interest on the funds remains at zero. Here's a working example based on $100,000 available for initial use.
With this initial PubLock, you're issued $165,000. Because protecting your credit score matters, you never want to use more than 85% of any account. So $140,000 is now deposited into your business checking account. Then the portfolio creation fee of 10 to 15%, $20,000 in this example, is deducted, leaving $120,000. You need to set aside $17,000 for the first 6 months of payments.
This provides you with $103,000 unencumbered for 6 months at 0% with nothing out of your pocket. Now you can go plug that into your money-making machine and turn it into profit. How fast can you double money? How long is your profit turnaround cycle?
Once the entire portfolio is approved and available, we will assist you in properly transferring the funds into your business checking account so that none of the transfers are treated as cash advances and all of those transfers qualify for 0% interest.
We strongly suggest you set aside the first 6 months of payments and establish auto pay on each account. It is critical every payment is received on or before the due date and the minimum payments are avoided.
At stage 1, we are just 6 months into your plan and we need to move $42,000 around. $31,000 will pay off all the 6-month 0% interest accounts, and you'll set aside $11,000 for the next 6 months of automatic monthly payments.
Your profit turnaround time and expected cash flow will tell you if you need to set aside some of the initial $100,000 for these expenses. Whether it comes from profit or the original credit line withdrawal is a strategic decision you can discuss with your advisors.
Either way, you'll have $61,000 at 0% to use for your money-making machine for the next 6 months, and you'll make the payments over the next 6 months because you set aside the $11,000 to do so.
So let's recap what's changed for you over the last 6 months. You see, your credit scores increased because,
well, you've successfully made 72 payments on time, Jeff.
you have repaid 3 accounts early and in full, Ward.
That's right. You have over 40% of your credit line available and unused.
At 9 months, you'll have received offers from multiple lenders.
You'll negotiate for larger amounts and better terms just like you practiced and learned how to do it when you were setting up your initial portfolio.
You have replaced some or all of your 6-month 0% interest lenders with longer 0% windows and larger amounts.
At stage 2, we are just 12 months into your plan and we need to move money around again. $27,000 will pay off all of your 12-month 0% interest accounts. And again, you'll set aside $7,000 this time for the next 6 months of payments.
At this point, your credit score is excellent at 780 plus, and you are the select 20% of borrowers who receive the best terms because you have successfully made 126 payments on time.
Wow, most people take more than a decade to do that.
You've repaid 6 accounts early and in full.
Most people never do that, Jeff.
You now have 65% of your credit line available and unused.
You obviously manage money well, and you're clearly not one of the most people I was talking about.
At 12 to 18 months, your credit score is the highest it has ever been.
Congratulations.
You have multiple offers to review. You've gained freedom, independence, and choice.
You've dropped lenders, added lenders, but more importantly, you've added to the amount of credit now available to you. You also have more 24 and 18-month 0% interest money available.
At stage 3, we are 18 months into your plan and we need to move $27,000 around. 24 is going to pay off all your 18 months 0% interest accounts, and you're going to set aside $3,000 for the next 6 months of payments.
During this time period, your credit score is still rising, and you're, well, amazed. You're using your new credit to expand your business again. You routinely receive, counteroffer, and expand your credit portfolio.
At stage 4, we are 24 months into your plan and we need to move 20,000. You're either paying this final lump sum from profit or a balance transferring it to another 0% account somewhere else.
Your available credit should be approaching twice what it was just 24 months ago. You are using 0% interest for all your non-asset-based lending. Your credit cost for everything is, well, rock bottom, and your rocket credit portfolio has paid for itself many times over.
Finally, let's compare a PubLock Rocket credit line to traditional lending in the 3 most common business situations. Everything goes great, sometimes payments are late, and sorry mate,
It's too late. When everything is great, organized banking will bless you with a slight increase in your credit score. Next time, please apply again. With a PubLock, your credit score rises, your credit availability rises, and you have lenders sending you pre-approved offers.
With multiple late payments, organized banking hands you penalty interest rates on your entire credit line closure, and your credit score plummets. With a PubLock, only the lines paid late increase. Your other lines are unaffected. Your credit score dips, and then you transfer the penalty rate accounts to other 0% accounts.
In a worst-case scenario, bankruptcy, organized banking attaches your collateral and sues you for the difference. With a PubLock, you settle unsecured debt for a reduced amount.
So in a best case scenario, where you make money and repay within the 0 time frames, you'll have a higher credit score with more credit available at a lower cost using a PubLock than you could ever achieve using one lender with one loan.
You will work with many lenders at 0% interest and discard every lender who raises their rates. You're truly in the driver's seat with all the options, not the other way around. For fast, specific information about your options, please contact us on our website contact page at www.MoneyMiners.Biz. Thank you.
This video has general and specific information about business lending and is neither offering nor providing specific or individual legal, accounting, or financial planning advice. All business ventures carry risk, and this video mitigates none of that risk. For these and many other good reasons, you need to establish working relationships with excellent legal, accounting, and financial planning advisors. The examples given herein are for conceptual clarification and not a specific representation of any person's results. All credit is issued by independent financial institutions, whose terms and limits will change over time. Your specific results will vary by individual efforts and creditors selected.